Hello and welcome to the weekly market metrics. We are in week 47 of the year, just 5 weeks left in 2025. At this point, no more reminders of New Year resolutions or New Year plans. I am giving up on everything, people, except for markets, that is. Anyways, let me get back to business. It's time for our weekly dose of market metrics. This week, we saw the Indian corporate earnings staging their strongest recovery in over a year, with brokerages turning upbeat on profit growth in the second half thanks to a broader consumption rebound. Talking about the indexes, NIFTY and SENSEX were just an inch shy of hitting a new all-time high after 14 months, that is, while BANKNIFTY and MIDCPNIFTY did break into fresh all-time highs this week. Overall, the positive sentiment is still intact, the charts agree, but with the US market sneezing on Thursday, the big question is whether India would catch any of those ripple effects. Anyways, let's get started with the charts and indexes. As always, Nifty first. On the weekly time frame, Nifty gained 158 points or 0.61%, marking two straight green weekly candles, closing at 26,068. Resistance levels remain the same as last week at 26,100, followed by the all-time high at 26,277. Support sits at 25,500. The index didn't close above the 26,100 resistance, but it did hit a high of 26,247 during the week, just 31 points shy of the all-time high. It managed to close above the 26,000 mark, a big round number and a strong psychological barrier. Maybe we'll see the new Nifty all-time high in the coming weeks, fingers crossed. Moving on to the daily time frame, Nifty printed 3 green candles and 2 red candles this week. Thursday's gap up and strong early momentum had everyone thinking a new all-time high was finally coming, but post 2:30 p.m. sell-off followed by Friday's dip pushed that moment a little further out, I think. Resistance levels are the same as weekly 26,100 and the 26,250, 26,277 zone from this week's high to previous all-time high. Support sits at 26,000 and 25,750. On the daily chart, Nifty remains in an uptrend as long as it holds above 25,750. Moving to my favorite 1-hour time frame, Nifty stayed above the 50 EMA for the entire week. It briefly tested the EMA on Wednesday during the opening hour but bounced back quickly. On Friday, the last hour candle brought the price close to the EMA, but it still sits about 74 points or roughly 0.3% above it. In fact, Nifty has been holding above the 50 EMA since 11th November, so that's 11 straight calendar days of strength. Hourly bias remains positive and hopefully the price continues to push higher. Moving to the overnight versus intraday action in Nifty this week, there wasn't much happening overnight. Even with Monday and Thursday's gap up opens, the index ended with almost flat overnight gains at 0.05%. Intraday action was positive but only mildly at 0.41%. So far, after 47 weeks in 2025, Nifty has gained 9.3% from overnight moves and only 2.12% from intraday moves. And that confirms to the larger overnight drift structure. Moving on to BANKNIFTY, on a weekly time frame, BANKNIFTY added 350 points or 0.6%. It hit a new all-time high at 59,440 before pulling back to close at 58,867, almost 1% off the top. Support sits at the previous resistance of 58,600 with resistance at the weekly high of 58,867. At an all-time high, a strong Marubozu style candle is usually a bullish sign, but this week's BANKNIFTY candle looks more like a shooting star, which isn't ideal. Hopefully it doesn't signal a reversal. We'll know more once we see next week's follow-up candle. On the daily time frame, BANKNIFTY printed 3 green candles and 2 red candles similar to Nifty. Up until Thursday, the momentum was strongly bullish, but Friday's gap down and sell-off cooled things off. On Friday, both heavyweights, HDFC Bank and ICICI Bank, dropped over 1%, pulling the index down by 0.81% for the day. Key levels remain the same as the weekly chart, support near 58,600 and resistance at 59,440. Just like last week, BANKNIFTY hit a new all-time high on Thursday, only for Friday to drag it back down. But unlike last week, Friday's last hour price action wasn't very encouraging this time. Let's see what Monday and the coming week has in store. Moving on to the hourly time frame on BANKNIFTY, it stayed comfortably above the 50 EMA all of week, and on Friday it finally tested the EMA. Right now it's sitting right on it. Is this just a pullback or the start of a full-blown reversal? My bet is on the pullback, because historically shorts rarely work when BANKNIFTY is at an all-time high. The momentum is usually bullish. But hey, let me not make predictions again, because you all already know how bad I am at that. Moving on to mid-cap Nifty on a weekly time frame, it hit a new all-time high this week, just like BANKNIFTY, marking 2 weeks in a row of all-time highs. But it couldn't sustain the momentum, closing the week with minus 14 points or 0.10% down at 13,851. And similar to BANKNIFTY, it formed a shooting star on the weekly time frame, setting up an interesting bull versus bear battle for the coming week. Support sits at 13,450 and 13,250, with resistance at the new all-time high of 1473. The outlook is still bullish, but that weekly candle does make me a little concerned. Let's see how it unfolds next week. On the daily chart, mid-cap Nifty printed 2 back-to-back red candles at the end of the week, which did shift the momentum a bit after hitting its all-time high on Thursday. But as long as the gap zone at 13,750 and 13,700 holds, the outlook remains positive, and this is also the support area. Immediate resistance can be seen at this week's high at 1473, the current all-time high. Moving to SENSEX on the weekly time frame, the chart looks very similar to Nifty. It missed a new all-time high by just 176 points or 0.21% after hitting the weekly high of 85,802. SENSEX added 669 points this week, up 0.79% to close at 85,231, its highest weekly close since September 2024. This also makes it 2 straight green weekly candles. Immediate resistance is at 85,300, followed by 85,800, 86,000 zone, with support down at 83,200. Now I'll tell you something interesting. Whenever we see an all-time high on Nifty, we will see one on SENSEX too. Okay, that was pretty easy to guess, right? Moving on to the SENSEX daily time frame, the story is similar to Nifty. Resistance is at 85,300 and 85,800, with support at 83,150. I wouldn't judge Friday's candle until we see the follow-up in the coming week. The bias is still bullish, but we'll need a strong push to break the 85,800 zone and then the new all-time high zone around 86,000. Talking about the rate of change this week, in week 47 of 2025, all indices except mid-cap gained around 0.6% to 0.8%, while mid-cap Nifty slipped 0.1%. For the month of November, all indices are comfortably in the green. All 4 indices are now just 1% away from their all-time highs. Year-to-date, Nifty has finally hit double-digit returns at 10.25%, while BANKNIFTY remains the top performer with a solid 15.74%. SENSEX is up 9% and mid-cap lags at 7.31%, making it clear that 2025 wasn't a year for the mid-caps. Will the story change in 2026, or will large caps continue to dominate? Let me know your thoughts in the comments. Moving to the directional bias, just like last week, all 4 indices continue to hold a positive short-term and medium-term bias, with price staying above the 21 EMA and 50 EMA on the daily time frame. The overall sentiment remains positive, but now we wait for the price action to confirm whether this bullish phase continues with a proper continuation pattern or not. Looking at the top performing sectors this week, IT continues to lead for the second week in a row, with auto and services also carrying forward their strength from the last week. We have 2 new entrants this week, consumption and bank. And with all the talk about an AI bubble brewing globally, our IT sector doesn't seem to be showing any signs of weakness. Maybe Indian IT really has nothing to do with AI. I'm just kidding. Over to range, straddle prices and expiries. On Wednesday, Nifty, BANKNIFTY and SENSEX recorded their highest range day for the week. For mid-cap Nifty, Friday was its highest range day. Back to Nifty, if you see its 5-day range dropped from 200 to 160 this week. What does this range contraction mean? Likely a period of consolidation before the next big move? Even the 10-day average range has cooled off from 200 to 177. Meanwhile, the Nifty 2DT Straddle premium is at 209, up from 204 last week. Looks like the US markets really spooked Indian markets heading into the weekend, because even with a low 5-day average range of 160, the 2DT Straddle is still sitting at 209. Now, talking about Nifty expiry, after last week's tough expiry, this one was easier. With a 153-point range and a 117-point straddle premium at the open, there wasn't much to complain about. That said, Nifty gave us a full roller coaster experience. 150 points down, then 120 points up, and then another 120 point drop, finally closing minus 0.40 or 103 points down. So fixed SL strategies would have struggled, while combined premium SL strategies may have had a better chance of surviving the swings. Sensex expiry this week was much tougher. With a 600-point range and a 335-point straddle premium at open, it managed to trap both buyers and sellers. First dropping 270 points and then shooting 600 points straight up and finally falling another 270 points. After 2 p.m. there was no gamma spike at all. In fact, short options actually made money post 2 p.m. The Sensex expiry was a good reminder that we can never predict which setup will work on which day, and it's always better to stick to a consistent approach and let the law of large numbers do its job. I mean, we need to make sure that our risk is managed, but beyond that we cannot predict, is what I'm trying to say. Moving to India VIX, it jumped 14% this week, closing at 13.63, and the rising Nifty straddle premium heading into the monthly expiry reflects the same tension. From the bottom of 9.96 in September 2025, VIX has now risen 37% in just 2 months. Is this purely the impact of the US markets, or is there something else brewing beneath the surface? Your guess is as good as mine. Moving on to commodities this week, gold was stable with a small gain, continuing its strong momentum across all longer periods, though still about 5% below its all-time high. Silver dipped slightly but remains the strongest performer this year, with major gains over the last 6 months and nearly 65% YTD, despite being 9% off its peak. Copper was quiet with a mild weekly decline but holds a healthy medium-term trend and stays less than 7% below its all-time high. Crude oil stayed weak with another negative week and remains deep in drawdown. Natural gas, on the other hand, gained this week and continues its short-term recovery, though it still trades far below its long-term highs. Overall, precious metals lead, base metals remain steady, and energy continues to lag a bit. In summary, the markets had a broadly positive and healthy week. Nifty maintained its strong bullish structure, closing above the 26,000 psychological level and near a new all-time high. Both BANKNIFTY and MIDCAP Nifty did hit fresh all-time highs, though the appearance of a shooting star type candle signals potential short-term hesitation, even as the overall trend continues to remain positive. Sensex also delivered a solid bullish performance, nearing its all-time high. Across the board, all major indices hold a positive bias well above their key moving averages, with the IT sector leading the charge for the second consecutive week. However, India VIX, the volatility index, climbed sharply, influenced by US market anxiety, which kept option premiums elevated despite Nifty's tight range. In summary, while the week was marked by strong bullish momentum, minor technical warnings exist, so I will be closely monitoring the market developments in the coming week. Talking about what to expect next week, we have the monthly expiry for all NSE FNO stocks and indices, including Nifty, BANKNIFTY and MIDCAP Nifty on Tuesday, and Sensex on Thursday. Looking ahead to the next week, it's the final week of November and we've got a full 5-day trading stretch with no major events on the calendar. Let's see whether the market uses this calm period to break into fresh all-time highs or chooses to consolidate a bit before making its next move. So that's pretty much for this week, and yes, don't forget to subscribe to this channel. Until then, stay curious, stay steady, and have a great weekend. See you soon.